Stop. Before you check the price again, before you open another tab, before you convince yourself this is just another dip. I need you to focus right here. Because something happened in the last 24 hours that hasn't happened since June 2022. And if you don't understand what I'm about to show you in the next 30 minutes, you will make a decision you'll regret for years. Right now, as I'm recording this on February 24th, 2026, Bitcoin is trading at $62,700. That's not the story. 4 days ago, it was $68,000. A week ago, $72,000. And just this morning, Bloomberg published a headline that sent a shockwave through every institutional desk on Wall Street. Bitcoin heads for worst month since crypto collapse of June 2022. Bitcoin is down 19% in February. 19% in 28 days. Do you remember June 2022? That was crypto winter. That was Luna imploding. That was Celsius freezing withdrawals. 3 Arrows Capital liquidated. BlockFi collapsing. That was the month Google searches for Bitcoin is dead hit an all-time high. And according to Bloomberg, this month is worse. But here's where it gets dangerous. And I need you to really hear this. In the last 24 hours alone, $295 million in leverage positions got liquidated, wiped out, gone. That's not over a week. That's 1 day. And right now, prediction markets are pricing in a 42% probability that Bitcoin falls below $60,000 before this month ends. 42%. That's almost a coin flip. And if $60,000 breaks, analysts at Bloomberg, CoinDesk, and major trading desks are all pointing to the same number, $5,500. That's the next liquidation zone. That's where the real bloodbath begins. So let me ask you something, and I want you to answer this honestly, even if it's just to yourself. Are you scared right now? Because if you are, you're not alone. And you're not wrong to feel that way. Fear is a rational response when you see 19% vanish in a month. When you see $295 million liquidated in a day. When you see prediction markets betting on $52,500. But here's what fear doesn't show you. While all of this was happening, while retail was panic selling, while miners were capitulating, while Twitter was screaming Bitcoin is dead, someone quietly, without headlines, without announcements, accumulated 400,000 Bitcoin between $60,000 and $70,000. That's not a typo. 400,000 Bitcoin. At current prices, that's $26 billion worth of Bitcoin bought during the panic. And earlier today, Michael Saylor, the man who has staked his entire company on Bitcoin, posted something that every single person watching this needs to understand. He said Bitcoin's 45% drawdown right now is mirroring Apple in 2013. Apple's valley of despair. The moment, right before it went on to gain 700%. So here's the question this video is going to answer. Is Bitcoin about to collapse to $52,500? Or is this the last shakeout before the real move begins? Because one of those two things is about to happen. And the people who get this wrong will fund the people who get it right. Let me show you the data. Let's start with the facts. No hype, no predictions, just what happened in the last 4 days. February 20th, Bitcoin was sitting at $68,000. Not great, but stable. Market was waiting for direction. February 21st, it dropped to $66,500. A 2% slide. People shrugged it off. Just a dip. February 22nd, it fell to $64,800. Another 2.5%. Now people were getting nervous. February 23rd, Sunday, it crashed to $63,200, down 5% in 24 hours. By Monday morning, it had touched $62,700. 4 days, $6,000 gone. That's a 9% collapse in less than a week. But here's what makes this different from every other dip you've seen this year. This is the 4th consecutive day of decline. No bounce, no relief rally, no buy the dip working, just relentless, grinding selling pressure. And it's not just Bitcoin. Ethereum is down 6%, Solana down 8%. The entire crypto market cap has bled $120 billion in 4 days. Now you might be thinking, okay, markets go down, that's normal. And you'd be right, except this isn't normal. According to data from Bloomberg, Bitcoin is now down 19.2% for the month of February. That makes this the worst month for Bitcoin since June 2022. Let me remind you what that month was. That was the month Bitcoin fell from $30,000 to $7,500. That was the month the entire crypto ecosystem nearly collapsed. That was the bottom of the bear market. And this month is tracking worse, but let's go deeper. Because the real story isn't the price, it's how the price is falling. In the last 24 hours, 295 million in leveraged long positions were forcibly liquidated. That means traders who borrowed money to bet on Bitcoin going up had their positions automatically closed by exchanges. They didn't choose to sell. The system forced them to sell. When that happens, it creates a cascade. Liquidations trigger more selling. More selling triggers stop losses. Stop losses trigger more liquidations. It becomes mechanical, automatic, relentless. And here's the terrifying part. According to on-chain data from CoinGlass and Glassnode, there are still hundreds of millions of dollars in leveraged long positions sitting between $60,000 and $63,000, which means if Bitcoin breaks $60,000, we could see another wave of forced liquidations. Another $200 million, $300 million, maybe more, wiped out in hours. And that's not speculation, that's just math. That's how liquidation cascades work. Now let me show you something that should make every single person watching this sit up and pay attention. Prediction markets. These are real money markets where people bet on outcomes. And right now, according to Polymarket and other prediction platforms, there is a 42% probability that Bitcoin falls below $60,000 before the end of February. 42%. That's not some random analyst's opinion. That's actual money on the line. Real traders betting real capital that Bitcoin breaks $60,000 in the next 6 days. Think about that. The market is essentially saying there's a coin flip chance we see $50 something thousand Bitcoin before March. But wait, there's more. One of the largest Bitcoin mining companies, Bitdeer Technologies, just announced this morning that they have fully liquidated their entire corporate Bitcoin holdings. Read that again. A Bitcoin miner, a company whose entire business model is predicated on Bitcoin's long-term value, just sold all their Bitcoin. That's not a dip. That's capitulation. Miners don't sell unless they absolutely have to. Because selling Bitcoin is literally selling their future revenue. It's like a gold miner selling all their gold reserves at the bottom of a crash. You only do that if you're in survival mode. And Bitdeer isn't some small operation. They're one of the largest miners by computational capacity. Their decision to exit their treasury position is a signal. A very loud signal. Now here's where it gets even more intense. President Trump's new tariffs, 15% across the board on all imports, went into effect this morning, February 24th, today. And markets hate tariffs because tariffs mean higher costs. Higher costs mean lower corporate profits. Lower profits mean weaker stock prices. And when stocks fall, risk assets like Bitcoin fall harder. That's exactly what we're seeing. The Nasdaq is down 1.8% today. Tech stocks are getting hammered. And Bitcoin, which has been moving almost in lockstep with tech stocks for the last 6 months, is following them down. So let's summarize where we are right now. Bitcoin is down 19% for the month. Worst month since 2022 crypto winter. 4 straight days of decline. $295 million liquidated in the last 24 hours. A major miner just capitulated and sold their entire Bitcoin treasury. Trump's tariffs kicked in today. And prediction markets are giving it a 42% chance we break $60,000 in the next 6 days. That's the bloodbath. But now, let me show you what happens if $60,000 breaks, because this is where it gets truly dangerous. There's a reason everyone is watching $60,000 right now. It's not just a round number. It's not psychological. It's structural. Let me explain. Bitcoin hit $60,000 once before this month. February 6th, it touched $60,050, and then it bounced hard. Within 3 days, it was back above $68,000. That bounce created something called a support level. Support is a price where buyers historically step in, where demand overwhelms supply, where the market says, okay, that's cheap enough, I'm buying. $60,000 became that level, and for the last 2.5 weeks it held. But here's the problem. Support levels don't work forever because markets have memory. And the longer a support level holds without breaking, the more leverage positions build up just above it. Think of it like this. Imagine you're a trader. You see Bitcoin bounce off $60,000 on February 6th. You think, okay, $60,000 is the floor. If I buy at $61,000 with leverage, I'm safe. Worst case, it drops to $60,000 and bounces again. Now multiply that logic by 10,000 traders, all of them piling leveraged long positions just above $60,000, all of them assuming it holds, and all of them setting their stop losses just below $60,000. Do you see the trap? If Bitcoin breaks $60,000, even by $100, it triggers a tsunami of stop losses. Those stop losses become market sell orders. Those sell orders push the price lower, which triggers more stop losses, which triggers more sell orders. It's a death spiral. And according to analysts at Bloomberg, if $60,000 breaks with conviction, meaning it doesn't just wick down and recover, but actually closes below $60,000, the next major support level is $50,500. That's $7,500 lower. That's another 12% drop from here. Now let me show you why $52,500 isn't just some random number an analyst pulled out of thin air. According to on-chain data from Glassnode, $52,500 is the realized price floor for short-term holders. Short-term holders are people who bought Bitcoin in the last 6 months, and the realized price is the average price they paid. When Bitcoin falls below someone's purchase price, they're underwater, they're losing money. And human psychology says that when you're losing money, you hold. You don't want to lock in a loss. You tell yourself it'll bounce back. But if it keeps falling, eventually you panic. You sell. And that selling pushes the price even lower. $52,500 is where that panic selling zone begins for the massive cohort of buyers who accumulated Bitcoin between October 2025 and January 2026. That's millions of people, billions of dollars in Bitcoin bought at prices that are now underwater. If we hit $52,500, those holders capitulate. And when millions of holders capitulate at once, it doesn't stop at $52,500. It overshoots. Some analysts are even pointing to $45,000 as a worst-case scenario. That would be a 60% drawdown from the all-time high. That would be worse than the 2022 bear market. And here's the part that should terrify anyone holding Bitcoin with leverage right now. According to CoinDesk, if Bitcoin breaks below $60,000, it enters what they're calling a liquidation zone. A liquidation zone isn't just about stop losses, it's about forced liquidations from lending platforms and collateralized loans. Here's how it works. Let's say you took out a loan against your Bitcoin. You put up one Bitcoin as collateral worth $68,000 at the time, and you borrowed $40,000 in cash. The lending platform gives you a liquidation threshold, let's say 60% loan to value. That means if your Bitcoin collateral falls below $66,660 in value, they liquidate your Bitcoin to recover the loan. Now imagine thousands of these loans sitting between $60,000 and $65,000. If Bitcoin breaks $60,000, all of them start triggering at once. BlockFi, Celsius, it happened in 2022. Forced liquidations of Bitcoin collateral to cover dollar-denominated loans. And when lending platforms liquidate, they sell on the open market. They don't wait for a good price. They dump. That's why $60,000 is so dangerous. It's not just retail stop losses, it's institutional forced selling. And it's not just Bitcoin holders at risk, it's the entire DeFi ecosystem. Wrapped Bitcoin on Ethereum, collateralized stablecoins, yield protocols, everything built on the assumption that Bitcoin doesn't fall below $60,000. So let me paint you the picture of what happens if $60,000 breaks. Within hours, $200 million to $400 million in leverage long positions get liquidated. Bitcoin drops to $58,000. That triggers lending platform liquidations. Bitcoin drops to $55,000. That triggers short-term holder capitulation. Bitcoin drops to $52,500. At that point, Fear and Greed Index, which is already at extreme fear levels of 10 out of 100, would hit single digits. Google searches for "Bitcoin is dead" would spike to 2022 levels, and every mainstream media outlet would run the same headline: "Bitcoin crashes 60% from peak. Is crypto over?" That's the $60,000 liquidation trap, and it's sitting right there, $6,000 below the current price. But now let me show you the other side, the side that mainstream media isn't covering, the side that could make the difference between losing everything and making life-changing money. This morning, February 24th, 2026, Michael Saylor posted something on X that I need every single person watching this to understand. He said, "Bitcoin down 45% from its peak is mirroring Apple in 2013, the valley of despair. Every successful technology investment must experience a 45% drawdown and a valley of despair. This is relatively mild compared to historical patterns." Let me break down why this statement is either the most brilliant analysis you'll hear all year, or the most expensive cope in financial history. In 2013, Apple stock peaked at $705 per share in September 2012. By April 2013, it had fallen to $385. That's a 45% drawdown, almost identical to Bitcoin right now. At the time, everyone said Apple was done. The iPhone 5 was disappointing, Android was winning market share, Samsung was dominating, tech analysts downgraded Apple, hedge funds sold, retail panic sold. The narrative was, Apple is a one-hit wonder. Steve Jobs is gone, the magic is over. Sound familiar? But here's what happened next. By 2015, Apple stock was back above $700. By 2018, it hit $1,000. By 2020, it was $2,000. By 2024, it peaked at over $3,000 per share. If you bought Apple in April 2013 at $385 in the middle of the valley of despair, you made over 700% in 11 years. And Saylor is saying Bitcoin is in that exact same moment right now. Now, let me give you both sides, because unlike most Bitcoin influencers, I'm not here to pump hopium. I'm here to show you reality. Apple in 2013 had fundamentals. The iPhone was still the best smartphone, iOS was still the best ecosystem. Apple's revenue was growing. Profit margins were insane. The stock was undervalued based on earnings. So the question is, does Bitcoin have fundamentals? And here's the answer. Yes, but they're different. Bitcoin's fundamentals aren't revenue or profit. Bitcoin's fundamentals are scarcity, network security, and adoption. Let's go through each one. Scarcity. 95% of all Bitcoin that will ever exist has already been mined. 19.96 million out of 21 million. After the April 2024 halving, only 450 Bitcoin are mined per day. That's 164,000 Bitcoin per year. Compare that to institutional demand. Spot Bitcoin ETFs alone hold 1.26 million Bitcoin. If just 10% of that capital wants to add to their positions, there isn't enough Bitcoin being mined to meet demand. Network security. Bitcoin's hash rate hit an all-time high of 1.15 zettahashes per second last week. Miners are expanding infrastructure during a crash. That doesn't happen if they expect Bitcoin to die. That's a long-term bet on survivability. Adoption. Despite the crash, BlackRock's IBIT still holds $54 billion in assets. 93% of holders did not sell during this drawdown. El Salvador still holds 6,074 Bitcoin. Texas just became the first U.S. state to buy Bitcoin for its treasury. Trump's executive order established a strategic Bitcoin reserve. These aren't short-term speculators. These are governments and institutions building long-term positions. So yes, Bitcoin has fundamentals. And if Saylor is right, we're in the valley of despair before the next leg up. But let me give you the bear case too. And I need to be honest about this. Apple in 2013 had a product people couldn't live without. The iPhone was embedded in daily life. Bitcoin in 2026 is still speculative. Most people don't use Bitcoin for anything. It's not a payment system. It's not a store of value if it crashes 50%. It's a bet on future adoption. And here's the uncomfortable truth. The Bitcoin ETFs that were supposed to be the rocket fuel for this bull run, they're bleeding. $18 billion in net outflows since November. That's not retail. That's institutions exiting. And Saylor's own company, Strategy, formerly MicroStrategy, is now underwater on their Bitcoin position. Their average purchase price is $76,037. Bitcoin is at $62,700. They're sitting on a paper loss of over $9 billion. Now, Saylor says they're never selling. They're going to buy Bitcoin every quarter forever. But if Bitcoin keeps falling, at some point, Strategy's debt holders start asking questions. At some point, the market starts pricing in default risk. At some point, even conviction has a limit. So is Saylor right? Is this the valley of despair before the next 700% run? Or is this the beginning of the end? I don't know, and neither does anyone else. But here's what I do know, and this is where the data gets really interesting. According to Glassnode, one of the most respected on-chain analytics firms in the world, over the last 3 weeks, 400,000 Bitcoin have been accumulated in the $60,000 to $70,000 price range. 400,000 Bitcoin. Let me put that in context. At an average price of $65,000, that's $26 billion worth of Bitcoin bought during the panic. That's not retail. Retail doesn't have $26 billion. That's not even one institution. That's coordinated accumulation across multiple large players. And here's what makes this even more significant. According to the same Glassnode data, the supply of Bitcoin sitting in the $60,000 to $70,000 cost basis range has increased by 43% since the crash began. 43% in 3 weeks. That means almost half of all the Bitcoin currently held in that price range was bought during this drawdown. Now, who buys $26 billion worth of Bitcoin in the middle of a crash? Let me show you. First, the whales. According to on-chain tracking, wallets holding more than 1,000 Bitcoin added 53,000 Bitcoin in a single week. That's $3.4 billion in one cohort alone. Second, institutional desks. BlackRock's IBIT recorded its highest single-day trading volume ever on February 6th. Over $10 billion notional value. Now, that includes both buyers and sellers. But the fact that volume surged during the crash means someone big was transacting. And if you're BlackRock, you don't trade $10 billion in a day unless you're repositioning for something big. Third, sovereign buyers. According to reports, entities in Hong Kong and Abu Dhabi collectively moved $1.4 billion into BlackRock's Bitcoin ETF during the first 2 weeks of February. That's governments and quasi-government wealth funds adding exposure during fear. Fourth, corporate treasuries. Strategy, despite being underwater, bought another 2,486 Bitcoin during the crash. They paid $168 million when everyone else was selling. So let's summarize what we know. While retail was panic selling, while Google searches for Bitcoin to zero hit a record high, while prediction markets bet on $60,000 breaking, while mainstream media screamed crypto winter is back, someone quietly, methodically accumulated $26 billion worth of Bitcoin. That is not random. That is not lucky. That is strategy. And here's the part that should make you pause and think. When big money accumulates, they don't do it at the top. They accumulate at the bottom. They accumulate when everyone else is scared. They accumulate when headlines are apocalyptic. They accumulate when retail is liquidated, because that's when it's cheap. And if they're accumulating now between $60,000 and $70,000, what does that tell you about where they think Bitcoin is going? It tells you they believe this is the bottom, or at least close enough to the bottom that the risk reward is overwhelmingly positive. Now here's the other side of this side. And I need to be honest about it. Accumulation doesn't prevent crashes. Just because someone is buying doesn't mean the price can't go lower. If $60,000 breaks, it doesn't matter that $26 billion was accumulated above it. That just becomes more selling pressure as those positions get tested. But here's the thing. If 400,000 Bitcoin were accumulated between $60,000 and $70,000, that means there are now 400,000 Bitcoin that will not sell below their entry price unless forced. That's 400,000 Bitcoin of support. That's 400,000 Bitcoin that create a floor. And if $60,000 holds, even by a few $100s, even for a few days, then all of those leveraged shorts, all of those prediction market bets, all of those bearish narratives, they all start to unwind. And when shorts unwind, they have to buy back Bitcoin, which pushes the price up, which forces more shorts to cover, which creates a short squeeze. That's the other side of the $60,000 coin. If it breaks, liquidation cascade. If it holds, short squeeze. We're at a crossroads. There are 3 paths Bitcoin can take from here, and depending on which one plays out over the next 7 days, the outcome will be radically different. Let me walk you through each one. The first scenario is the liquidation cascade. 60K breaks and the market falls toward $52,500 with a possible overshoot to 45K. Here's how this plays out. Bitcoin closes below $60,000. Let's say it closes at $59,500 tonight. That confirms the break. Within 24 hours, $200 million to $300 million in leveraged long positions get liquidated. Price drops to $57,000. That triggers lending platform liquidations. Major DeFi protocols start seeing collateral shortfalls. Bitcoin hits $54,000. At $54,000, short-term holders, people who bought between October 2025 and January 2026, start capitulating. They've been holding underwater for months. They're exhausted. They sell. Bitcoin hits $52,500. At that point, fear and greed index goes below 5. Google searches for Bitcoin is dead, hit 2022 levels. Mainstream media runs nonstop crypto collapse headlines. Retail completely exits. And then, depending on macro conditions, if the stock market crashes, if Trump tariffs cause a recession, if there's a geopolitical shock, Bitcoin could overshoot to $45,000 or even lower. That's scenario 1, the liquidation cascade, the true capitulation event. Its probability sits at roughly 35% based on current liquidation levels in prediction markets. If this happens, what do? You wait. You don't catch a falling knife. You let it bottom. And then, when fear and greed is at 2, when Google searches hit panic levels, when no one wants to touch Bitcoin, that's when you slowly, carefully start accumulating, because that's when it's cheapest. That's when Saylor's Valley of Despair thesis actually plays out. The second scenario is the grind. Range bound between 60K and 70K lists for weeks or even months. Here's how this plays out. Bitcoin tests $60,000 again in the next few days. Maybe it wicks down to $59,800, but it doesn't close below $60,000. It bounces. That bounce gives bulls confidence. Shorts start covering. Bitcoin rallies back to $65,000, but then it hits resistance. Sellers who bought higher want to break even. It falls back to $62,000. This repeats for weeks, up to $68,000, down to $61,000, up to $66,000, down to $62,000. A grinding, exhausting range. No one makes money. Bulls get faked out. Bears get faked out. Volatility crushes leveraged traders on both sides. The market just bleeds everyone slowly. This is the most frustrating scenario because there's no clarity, no bottom, no breakout, just pain. The probability here is around 40% because markets love to torture the maximum number of participants. If this happens, what do? You stay patient, you don't trade the chop, you wait for the range to break, you watch for institutional inflows to turn positive. You watch for ETF flows to stabilize, and when the range breaks with volume, that's when you position. The third scenario is the reversal, a short squeeze that pushes Bitcoin past 70K and potentially toward new highs. Here's how this plays out. Bitcoin holds $60,000, it bounces to $64,000 today. Tomorrow it hits $66,000. On-chain data shows exchange reserves dropping. ETF inflows turn positive for 3 days straight. Michael Saylor buys another $500 million. Texas announces they're adding more Bitcoin to their treasury. Suddenly the narrative flips. Bottom is in. Accumulation phase complete. Next leg up. Shorts panic. They start covering. Bitcoin hits $70,000. That breaks the multi-week resistance. Momentum traders pile in. Bitcoin hits $75,000. FOMO kicks in. Retail comes back. Bitcoin hits $80,000. And then, depending on macro, if the Fed cuts rates, if Trump's strategic Bitcoin reserve starts active buying, if another country announces adoption, Bitcoin could retest $100,000 by Q2 2026. The probability of this scenario is roughly 25%, as it requires multiple bullish catalysts aligning at once. If this happens, what do? You don't chase the pump. You accumulate now at $62,000 while everyone is scared. Because by the time it's at $75,000, you'll wish you bought here. So which scenario happens? I don't know. No one does. That's the truth. But here's what I do know. Bitcoin is a machine that transfers money from the impatient to the patient, from the emotional to the disciplined, from the people who sell at $62,000 in fear to the people who buy at $62,000 with conviction. The question isn't whether Bitcoin survives. Bitcoin has survived 5 80% drawdowns. It has survived exchange collapses, government bans, quantum computing FUD, ESG attacks, and the 2022 crypto winter. The question is whether you survive. Can you hold through $52,500 if it happens? Can you buy when everyone else is selling? Can you ignore the fear and greed index when it hits 2? Because that's where fortunes are made. Not at the top, not when it's easy. At the bottom, when it's terrifying. June 2022, Bitcoin was $17,500. Google searches for Bitcoin is dead were at record highs. Retail was gone. Institutions were reassessing. 18 months later, Bitcoin hit $126,000. The people who sold at $17,500 funded the people who bought at $17,500. Right now, Bitcoin is $62,700. Google searches for Bitcoin to zero are at record highs. Retail is exiting. Prediction markets are bearish. 18 months from now, where will Bitcoin be? I don't know. But I know this. Someone is accumulating 400,000 Bitcoin. Someone believes this is the valley of despair. Someone is betting $26 billion that the bottom is near. Are they right, or are they about to lose everything? You decide. But don't make a permanent decision at a temporary emotional extreme. That's the video. If this helped you see the situation more clearly, subscribe. If you think I'm wrong, comment below and tell me why. If you want the next update when $60,000 breaks or holds, turn on notifications. This is not financial advice. This is data. This is structure. This is the war between fear and greed playing out in real time. And the people who understand that will be the ones left standing when the dust settles. I'll see you in the next one.